When we look at interest rates at the most popular banks for the majority of Americans where they're going to be keeping their cash, they are not making anything on their savings, despite the fact that interest rates from the Federal Reserve have been jacked up to decade highs. This right here is a chart of the federal funds rate, and this is the amount that the Federal Reserve is paying to banks on their reserves. So while they're getting a risk-free 4.5 to 4.75% on your money, they're passing through a whopping 0.01% of that.
And so a lot of people don't realize how severe these are going to get. And the scary part is these declines are so big and they catch a lot of people off guard that, there's reports done, just between 2008 and 2009, there was over 6,500 suicides directly related to falling equity prices. So what we're going into, what a lot of people don't understand is how severe things could get.
The world has changed so much in the last 3 years that I just find it absolutely unbelievable. And I didn't believe evil at this scale existed. And it does. There's a lot of distraction going on. What I would urge people to do, I don't pay attention to all of it all the time. And what I do is I try to focus on understanding the system behind it. Right now, they inflate the currency supply and they transfer wealth. But if they scare people too much, you can go into other assets. Well, once they've got central bank digital currency, if they don't want you to buy gold, they just won't allow you. The currency won't buy it. The currency is programmable. They can control almost every aspect of your life once we get on any programmable currency, where they can, if they don't like you, they can make it so that you can't spend any currency within a 5-mile radius, outside of a 5-mile radius of your home. If they don't want you to travel, you won't be able to buy airline tickets or take an Uber or pay for a hotel room.
Well, the markets are getting hammered. And of course, we know from the Fed minutes the other day that there's a lot more hawks in the Fed than there is doves, and that rates are not going to stop going up. And this is kind of a game that they're playing. And I think this is leading into the digital currency world. But inflation is not under control. We don't have people working. We're more in danger of stagflation right now, which would be obviously the worst, high prices and nobody working, because the jobs numbers, which we'll see next Friday, are going to be garbage as well, because the jobs that we're seeing are part-time employment, not full-time employment. So you have a hot inflation number, which is still well understated. And I can tell you that I don't go grocery shopping a lot, but when I'm in Vegas myself, which I have been, my bill is 40% higher over the last 6 months. So you can do that, and that's buying the same exact products.
They caused this inflation. They need to deal with this problem that they caused. I do not think that the mistake is tightening. I think the mistake was doing the stuff beforehand that made the tightening necessary. And I think the bigger mistake will be once they do beat inflation, how they will respond to that, because the way they're going to beat inflation is by causing a deep recession. In any case, once we see the data getting to the point where they believe it, it's already too late. The recession is already baked in. The hard landing is already almost a certainty.
If you really want to help out this country and remove the barriers between the very rich who just own things and people working at Walmart and at McDonald's who have suffered for 2 years almost of negative real wages and don't own houses, multiple houses, and don't have a stock account. You want to close that gap, which is the right thing to do. Okay, you want people to earn a living based on their productivity and their ingenuity, not because they inherited money or because they got a loan from the bank or the condition of how they were born. Jerome Powell, if he was really and truly going to fight inflation, come out and say, you know what, I'm going to raise interest rates, but I'm also going to drain all of this excess gambling liquidity from Wall Street.
Hello and welcome to Incubator Weekly. As you can see, we have an absolutely packed house relative to what we are used to. You have your usual co-host today, Ryan. Hello, Ryan.
Howdy.
And myself, Amanda. And today we are joined by not one, but two project leads. We firstly have with us the project lead for the Maya protocol, Aaluxx. Good morning, I guess, Aaluxx.
Hi, guys. Good morning.
Hi. Wonderful. And secondly, we have Dash Incubator strategist and lead of the Dash integration into the Maya protocol, Ash Francis. Good evening, Ash.
It's actually morning. I live in Vancouver, but good morning, Amanda.
It's more morning there than here.
Yeah, it's pretty early, 9 a.m.
Scrap the whole show. Let's start over again. Oh, well, in any case, glad to have everybody here. So let us start off with an overview from you, Aaluxx, as to why, basically, what is Maya? Why is Maya?
All right. So Maya is essentially a cross-chain exchange facilitator that doesn't rely on trusted centralized parties. It's run essentially by validator nodes running the Maya node code that have an incentive to secure the chain because they're posting bonds that are higher than the assets they're securing. And this allows you to do swaps. So imagine an Uniswap, but instead of being like Ethereum based and just for Ethereum tokens, this is much broader. And you could be swapping from Bitcoin to ETH to, say, Atom and to Dash. And that's why we're here today. Pretty cool stuff. We're based off of ThorChain's code base. So ThorChain is an amazing project that's been doing this for 2 years already. And we are essentially the first fork. And we have a friendly relationship with them. We've been working on this already for a long while. And we're looking forward to launch now in March. So do find out more about what we're doing and to have Dash integrated first things after launch. So we've been working on this for a while. I think Ash can give us an update on that. But yeah, we believe we're doing this because we've just noticed that centralized parties are not to be trusted in crypto. We've seen this with FTX and many other occurrences over time, and I hope this time we learned our lesson and start looking at which decentralized alternatives are there, like Maya and ThorChain, to not fall into this trap again. And from the videos we were showed, we need to do this now. The longer we wait, the more fragile crypto is for government regulation and capture. So there is some urgency to getting these out the door. And yeah, happy to be here. Thank you for inviting us to join.
Thanks, Aaluxx. So as you mentioned, Maya is a decentralized exchange, something that Dash has been interested to be in, have under its belt for some time now. And so this is where Ash comes into play, because, correct me if I'm wrong, the incubator had written a fair bit of code to integrate Dash into the project that Aaluxx forked from, which, as he mentioned, is ThorChain. And so we had some code, lots of code ready for that. How much of that was able to translate, Ash?
Yeah, ultimately we started work on ThorChain in June 2021. So a fairly long time ago. ThorChain was in a very sort of early stage as well. They were working on establishing processes for adding new chains, but as proactive as Dash is, we were in there first. We were the first project to really start building out and complete our own chain client for ThorChain. Otherwise, prior to that, all the other coins, their chain clients had been developed by ThorChain internal dev house, Nine Realms, who work very closely with ThorChain and operate nodes. So we carried on. We built this whole chain client for ThorChain, and we actually reached a completed chain client pretty quickly, relatively speaking. But unfortunately, the project's immaturity kind of caught up to it, and it started building out policies and protocols for how it wants to add new coins, and that meant a much longer process of moving goalposts. I don't harbor any sort of ill will to ThorChain because that's the nature of projects in this space. They move fastly, we iterate, and we learn, and it is essential for security and for the good health of their project that they are respond to their DAO. Effectively, they have a DAO of their node operators, and those node operators have to choose whether they want to add Dash. Like, we run our own governance questions to our network. So yeah, we completed the whole integration into ThorChain, and that was kind of sitting idle for a while. And since then, things have erupted. We have the first fork, obviously, with Maya. There's another fork happening called Black, which is by the actual Nine Realms team themselves, which is heavily privacy focused. But Maya is an ideal place for us. And one thing I'd like to touch on is that video at the start. It does show the value that Maya brings to this, the decentralized nature of exchange, the lack of those third-party controls. I can't wait for it. I'm so excited. And we've completed the Dash integration. We have successful trades happening. We're ready to go. Maya is launching. Like, everything is on full acceleration now.
Thank you. So before we get much more into why Maya and Dash, rather how it is that they can particularly benefit one another, if I may, wanted to back up just a little bit and just establish a few foundational elements of Maya, which is, okay, so obviously we're talking about a blockchain-based decentralized exchange here. Mm-hmm. Yes?
Yeah.
Okay. And the other day, when Aaluxx and I were speaking a bit about this call, I said, so establish for me, Aaluxx, now, what proof of whatever is Maya again? Is it proof of stake, proof of work? And he said something like, it's none of those things. And that's when I started to sweat and hoped that we could get a little bit of clarification on such things today. Would you tell us just a few of the technical basics of how the chain works, Aaluxx?
Sure. So it's kind of similar to a proof of stake chain, but I would call it more, or prefer to call it a proof of bond. And let me explain why. So ThorChain and Maya code is based on Tendermint. Tendermint is the underlying Tendermint BFT, which is the underlying consensus mechanism for all Cosmos-based chains. So Cosmos, Juno, in its time Terra, all of them run these Tendermint consensus, which is a Byzantine fault tolerant consensus that requires 67% consensus to operate. The nice thing, or why it's great to do it on Tendermint, if you're talking about the decentralized exchange, is that it has instant confirmation. And Dash knows a bit about this instant confirmation power, because if you're talking about a chain that will be helping you swap from Bitcoin to ETH, for instance, Bitcoin has block confirmations, ETH has block confirmations, and then having also the middle man between them, the ThorChain or Maya be also having block confirmations, would be very, very difficult to pin down, and allows things like front running, which we don't want, and other stuff. So having Tendermint is a sound decision in this regard. And it also comes with all the Cosmos SDK tools to more easily develop all of these tools. So it's an application-specific blockchain, essentially. Now, the reason why it's proof of bond, while you see other Cosmos chains be proof of stake, is that typically in a proof of stake governance, the person or the node with most stake has more voting power. And this is not true on ThorChain or Maya. Every node has one voting power, regardless of how big or small their bond is. Now, the interesting thing is bonds are typically very homogeneous, because the protocol is constantly churning out the lowest bonds and allowing the largest bonds to churn in every 7 days or so. So this tends to make nodes have more or less the same bond, and that would happen as well on Maya. So that's why we call it proof of bond. You're essentially having a senate of several nodes that are securing the chain, having these huge bonds that is their own, and if they misbehave, their own bonds will be slashed to make the network whole again. So that's why it's kind of in the branch of proof of stake, but just a bit different. which makes sense. It just makes sense for this blockchain in the sense of how it works.
So I guess I can immediately see some of the initial reason why the Dash team and the Maya team were attracted to each other at first, which is, Rion, am I correct in saying that the currently in development Dash platform also utilizes the Tendermint blockchain setup? So we're kind of like working on the same ethos in a way here?
Yeah, I was actually going to point that out and maybe ask a follow-up question about that, because we have done the same thing. We have a fork of Tendermint. We call it Tender Dash. I think nobody's in love with that name, but it was just a temporary thing. If anything, it probably should be Dash Mint, like your anyway. But
love Dash Mint, by the way. Sounds cool.
But yeah, the fact that Maya is using equal weights for their voting does sound a little bit similar to how we do it, because for the validators of a Tendermint fork, it's usually, as far as I understood, it's usually that, like you said, Aaluxx, that this different validators have different weights for their voting. But with Dash, we have masternodes, which all have exactly 1,000 Dash. And so they have exactly the same stake. And we kind of need that. So I wonder if there's maybe even a potential where instead of using, well, you've got your customized solution, but at some point we're going to kind of generalize the Tender Dash mechanism to be applicable for other chains to use. So I wonder if that might be a potential thing to look into for Maya. But yeah, that's a great project. Cosmos has done enormous things for this cryptocurrency space. And I just wanted to point out one other thing that I was thinking about when Aaluxx was talking, or somebody was talking. It's kind of interesting. There's a lot of parallels between Maya and Dash right now, because ThorChain was kind of the leading crypto exchange DEX. And that's kind of like Bitcoin in a sense, that it was the leading cryptocurrency. And then Dash came along and we had some innovations and some things that we wanted to change. And so we forked from Bitcoin. So we're Dash is to Bitcoin like Maya is to ThorChain in a lot of ways. And I expect to see some of that innovation where, you know, maybe you have some things that you want to change. And I think you have changed a lot of things. And we should probably get to some of those differences between ThorChain and Maya at some point. But yeah, I think it's great to have these alternatives, because where would we be if we only had Bitcoin and that was the whole of cryptocurrency? Well, we wouldn't have Dash for sure.
Pretty sure I'd still be trying to figure out how to use a Lightning payment solution without relying on some kind of risky party in the middle. So I was thinking, do you think it would be helpful, Aaluxx, if we were, because somebody can try out what Maya is going to feel like in a way right now, right? And almost even, as you had said, prepare themselves if they want to participate in your upcoming token auction by going through the current ThorChain wallet app, which is compatible with everything you're doing right now?
Yeah, so ThorChain ecosystem is a bit confusing because many brands have the Thor name on it. So one thing is ThorChain, and that's the protocol and kind of the chain. Then we have ThorSwap, which is one of the leading user interfaces on ThorChain. And then we have ThorWallet, which were the first to have a mobile app for this ecosystem, and now also have a web application. So on the case of ThorWallet, we've done a very close collaboration with them and have been working with them for months now on integrating Maya into their system. So they're kind of like our go-to launch partner at this point, where we've tested most things and we have everything much better pinned down. So if you want to participate in Maya's liquidity auction, which we could talk more about in a second, which is the way we essentially distribute all of the cacao out to all the liquidity providers, you can test that on ThorWallet first. So like go get familiar with ThorChain, ThorWallet, you can go to app.thorwallet.org today and like create your wallet there, do some swaps. You won't see Dash there because Dash is not on ThorChain, but very soon you'll see also Maya there, and within Maya Dash, and you'll just be using that same interface. So you're gonna get a hang of things and kind of just prepare yourself practically and theoretically. You can just do more research on ThorChain itself, and then you'll be much better set up and better prepared for Dash upcoming launch on Maya.
Okay, so for anybody who may like to get familiar with this interface, both to be prepared for Maya's liquidity auction, which we'll talk more about in a few minutes here, as well as to integrate or interact rather fully with Maya once it's launched and Dash is available, we do have this fancy pants video here that your team made, Aaluxx. Shall we show it to kind of give a visual of what we're talking about here?
Yeah.
Okay, let's show it. Well, I think that cleared a few things up. So let us talk then about this issue of adding liquidity. Ash, will you give us just a general overview of, okay, if I'm a person who holds Dash and I'm not necessarily looking to swap, but rather I want to be a liquidity provider on Maya, what does that generally mean, and how would I generally go about that?
I appreciate the question, but I think this time I'm going to give this to Aaluxx on this one. I feel like he's got a better grasp on the economic side of it than I necessarily do, and he can talk about impermanent loss. And I think you guys are launching with impermanent loss insurance, even though ThorChain are dropping impermanent loss insurance soon. And I wonder if you're following suit, if you could answer that as well.
Yeah, sure.
Ooh. Well, I'm glad you brought that one up, because that seems like a big one too, Ash. So yes, please, both of those, Aaluxx.
Okay, well, there's two options for people who want to add Dash to Maya for earning. Option number one is kind of the simplest. If you're not very savvy on crypto for a long time and you haven't had any experience doing any liquidity providing and elsewhere, which is Dash Savers. And Dash Savers is just adding Dash and getting in-kind yield. Now that in-kind yield is variable, and it's variable because it depends on the fees generated by the pool. So it's if there's no swapping going on in the Dash cacao pool, there's no yield to give out. So it's real yield. It's coming from exchange and coming from real utility, which makes it scalable. But then on Dash, you just get, you have your Dash there on the Savers. You're getting Dash in-kind yield. And then you can withdraw. Just importantly, going in and out of Dash Savers incurs slippage. So just make sure you are expecting to have your position probably around 2 to 3 months at least, because if you're just going in and out very quickly, you're probably going to be at a small loss from that slippage. So do keep that in mind. But that's the best option if you're kind of a starter in all of these. Earning yield on DeFi stuff. Now, if you like a better return and you have more experience of being on Uniswap or ThorChain itself, what you can do is do dual LP, which is you get Dash and you get cacao and you put both into the pool. And this way you'll get also variable yield, but it's generally much higher than Dash savers. The problem being that you incur impermanent loss. Impermanent loss happens when one asset increases or decreases in price respective to another, and that loss is triggered by arbitrage. When arbitrage is when they bring back the pool to equilibrium with the new market price. There's some profit to be made. That profit is made by the arbitrage bot or whoever is running that arb trade, and the profit had to come from somewhere. It comes from the LPs. So there's always like this constant battle being fought in a liquidity pool where you have impermanent loss taking down your position and the yield generated by the swaps increasing your position. And as long as the yield is higher than impermanent loss, we're fine. But in very large price movements, it can happen that impermanent loss outruns yield, which is why dual LPing is more risky, but gives you a better return as well when it works out. Now, importantly, this impermanent loss, which is a weird name, but it's just essentially loss given to arbitrage. The thing with it is that it obviously detracts a lot of people from LPing. So there's a way that you can socialize that loss to the protocol because the protocol is interested in having a lot of dual LPs. And some pools are doing better than others. So when you socialize the loss of one pool to the rest, you're essentially just motivating more liquidity. Now, the thing is, how ThorChain used to do it is that impermanent loss ramps up from 0 to 100% over 100 days at 1% per day. What that means is on day 30 of your LP position, if you withdraw and you have any impermanent loss, the protocol will pay you 30% of that loss back on day 30. And after day 100 and onwards, it will always pay you 100% of that loss. Now, ThorChain had that program. They retired it now that they have savers. But LPing is much more important on Maya because LPing is also the way nodes bond their assets. So because of that, we needed ILP back, but in a more sustainable way. Because the problem also on ThorChain is you had a lot of short-term LPs that just wanted to come in for the quick buck, right? And as soon as there was some impermanent loss to get back, they would just withdraw. So the question that we pose ourselves is, how can we do this better? Where you're incentivizing the right kind of long-term LP, where you're not having too much strain on the reserve, and that it still has a net positive of having people have confidence doing dual LP. So we did two things for this. Number one, impermanent loss protection starts until day 50, not on day 0. So you have 0% impermanent loss protection from your LP during the first 50 days, which is kind of already a long-term commitment. For a month and a half, I'm not protected at all. And if I want to have full protection, then it's from day 50 to 150, which is already kind of almost 6 months. So we believe that's kind of the right way to go. Now, importantly, from day 50 to day 150, you get impermanent loss protection for cacao underperforming your asset. Essentially, what we're saying is we're going to protect you in 150 days from you being worse off because of Maya and because of kind of having a lower token price. But we will protect you from day 50 to day 450 at 0.25% per day for cacao overperforming your asset. So essentially, the logic there is you're already better off thanks to cacao being a strong asset. On day 100 or something, we're not going to pay you impermanent loss protection on top of that. But if you're staying for 1.5 years, then you're a very, very committed person. You're needing that fund for something else. We'll gladly pay you back for that loss. Such that somebody looking to really hold cacao with an asset for a very long time in a LP position, it has a confidence that the fact that they're contributing to the liquidity of the protocol for the long term and the success of the protocol for the long term, they'll also enjoy fully the benefits of the cacao side in the long term as well. So it also makes it such that it's very tough to withdraw. It's a very large decision to choose to withdraw. since whatever you withdraw now loses and starts the counter again. So that's more or less the logic on it. It makes our program be between 25 and 30% cheaper than ThorChain's IOP program, which was also relatively cheap. So in general, we think it's the right direction. We have no plans of taking that off the table, at least for the time being. It can change in the future. I don't know. Governance at the end will slowly also be passed on to nodes, and they can decide to grandfather it. But in the meantime, in our vision, at least from the core team, is to have it on, especially since nodes LP their bond. So yeah.
So is this where the liquidity auction comes in? If I want to stake Dash, must I own like a 1-to-1 ratio of cacao as well? Is that the purpose of cacao, or why would I buy cacao?
Okay, so liquidity auction is how we launch, and that's one thing. We can discuss it in a second. What you're mentioning now is LPing, dual LP, which is, you have Dash and cacao 1-for-1 in some metric of value. Say you choose dollar as a base. So if you're putting $10 for Dash, you have to put $10 for cacao and put them in an LP together. Now, the reason cacao exists is because when you do a swap, what actually happens, let's say I go Bitcoin Dash in a swap. What actually happened in the kitchen was a Bitcoin to cacao swap, and then a cacao to Dash swap. And it essentially left yield in both of the pools, right? And this is essentially how things work. People add to one chain or the other, and cacao is always kind of the middleman. The price reference, it sets the exchange rate, and that's more or less how that works. Which is why we need people adding both assets. They're kind of investing into a pool to get the yield out of the utility of the exchange. And this is very rapid. It's on code, right? And both Dash and Maya have very fast confirmation time and kind of finality. So you're talking about being able to just be doing swaps back and forth all day, generating a lot of money velocity, which is essentially where the yield comes from.
Okay. So let's talk a little bit about the infrastructure that is running this whole process. I learned just last week, like maybe some others did, that the Dash Incubator intends to run what is called a Genesis node. So is this still in the plans? And if so, does that mean the incubator participates in some liquidity pools, or not at all, because the node is different from that? Somebody clarify that for us.
I'm happy to jump in here. It's really an interesting case with Maya because there has to be nodes to launch with, but there is no asset to bond with initially to actually launch those nodes. It's given to several trusted parties the sort of authority to be a temporary node operator. So all the transactions still happen on the nodes, but those nodes are not currently bonded with cacao. But they will be bonded with cacao in the future, at which point the Genesis nodes, who are here for this brief period, we're ephemeral, will roll out, and the bonded nodes will then bond in, and they'll be part of a churn, and they'll come into the place. So Dash Incubator and Dash as a sort of trusted partner has been chosen to operate one of these Genesis nodes to help launch the entire project and get it kicked off, help with this the liquidity auction, and just get Maya geared up to have that deep liquidity in those pools, because you've got this chicken and egg problem where you can't trade without liquidity, but you can't add liquidity until there's some trading. There's no desire to, so you need to sort of launch and gear up towards this launch. And as cacao is awarded and people bond in those nodes, then those nodes are bonded with real assets rather than any sort of trust or pseudo asset. And that's when the whole system is fully launched. So
it sounds like there's a fair bit of communication between Ash and Aaluxx anyway, or will be leading up to the day of launch.
There has been. We have a Discord group like with Ryan, Ash, and Aaluxx, which is the guy also doing all the code. By the way, terrific job he did. So do thank him from me. We've been in close contact for a few weeks now. We've even had the Dash Bifrost audited by Halborn already, with remediations already in place. So you can see that audit on docs.mayaprotocol.com/audits, and you'll see there the final report for Dash Bifrost. So pretty great job there. Obviously, security first. You can see all audits we've done in Maya there as well. And yeah, right now on the Discord channel, if you go and follow Maya there, you'll see a channel called Genesis Nodes. And we've been, for the last 4 or 5 days, constantly communicating quite a bit. Yeah, very busy.
I can only imagine. So then that leads to basically one final question from me, and that is, what kind of maintenance work or further development work might be required on the Dash integration after launch, if any at all?
I think one of the most important things for me is to improve the usage of it. Where the value that we add to Dash into Maya is all related to the volume of transactions that go through it. If we can integrate Maya straight into the Dash wallet, into our partners like Edge, we'll be able to improve that utility. Even people who want to open a shared Dash node on CrowdNode could go via Maya. There's so much use for this whole solution of exchange. Exchange is one of the biggest things in the whole crypto sphere right now. And the more we develop towards enabling and improving that integration and deploying that integration in wallets and elsewhere, the better, really.
Yeah, and just ongoing maintenance. There has to be some work done there, as Maya also is kind of through upgrades. There are just things that you need to review that are still working on Maya. Thankfully, Bifrost, which is kind of the module within Maya and ThorChain that handles all of these kind of external chains, is the one that changes the least in the ecosystem, because it's just the most kind of largest attack surface and just the most conservative place, and it's essentially just maintaining the threshold signature scheme in the wallet of the target chain. So it's nodes running wallets on the chain that have this threshold signature scheme, which is like a multi-sig but larger, that is both observing transactions and signing transactions. And that thing also depends on Dash. So if Dash ever has an upgrade, we also have to look at the Bifrost to make sure everything's fine. The thing is that chains also typically want to keep how wallets work very, very stable and not change it too much, because a small change in how a wallet works in Dash requires a lot of work here by Ash and team and just the Dash in general to go to their all in their integrations, apps, everywhere and change it. So for that reason, it's very rare that we will actually have to do major reworks or like maintenance on this integration, but inevitably sometimes there will have to be a bit.
I think you will have to keep the node up to date, our Dash node up to date, the software for that, and just little bits of maintenance. The largest change I can foresee coming isn't an essential change. It's as we release Dash platform and have usernames, we may wish to integrate usernames in some capacity, but because Dash is always going to be backwards compatible, that can be left down the line. We can have that 1 year, 2 years from now, and it'll be thoroughly battle tested before it ever reaches anything live. And that would be effectively probably just resolving a username to an address and having some relationship with the node there.
Well, that sounds exciting. Usernames with a DEX, that's really starting to talk business. So if we're expecting a launch in March, that's pretty much coming up soon. We'll stay tuned. Does anybody have any final comments or questions before?
That was a good question in chat. Yeah, I was just going to say, so obviously Maya's launching in March. The goal is then following that launch for Dash to be added as the first chain. The question is, though, it's interesting how it's phrased. It's like, when will Dash be on ThorChain? There is a cross-DEX sort of communication sort of plan between Maya and ThorChain. Aaluxx, briefly, could you give us a very high-level overview of what that looks like, how assets can move between the ThorChain forks and how that
Sure.
works?
So one of the major things we worked on as Maya was obviously like looking to join forces with other DEXs like ThorChain and Maya. So the closer we are, the better. At the end of the day, the main competitor here, like the enemy, is Central Exchange, and that's who we want to topple. So because of that, you gain a major advantage if your two DEXs, although different, running different chains, can both aggregate between each other and arbitrage between each other. So because of that, one of the things we developed is a Maya to ThorChain Bifrost, which essentially means Maya will have a ThorChain pool in Maya, so a Rune Cacao pool. And what this allows is for you to be able to move yourself swiftly from Maya to ThorChain supported assets seamlessly, and also for quick arbitrage to happen between both networks so they share the same pricing. So because of that, as soon as Dash is on Maya, Dash is essentially on ThorChain. Like you can go ahead and swap Dash to Aaluxx or Dash to Doge or Dash to Atom. Those three assets we won't be supporting in Maya, but you can swap across decentralized this way. So it just requires you to jump through one more hoop, which is just one more pool. Instead of going through two pools, you're going through three.
So
but
Dash
aside from that,
Cacao to Rune to BTC, for example.
yeah, no, Dash BTC, you can just jump within Maya.
But, okay, for Atom, Aaluxx, whatever
Exactly.
coin is on dark. So could it be that you would go from Dash to Cacao to Rune to Dark to Pirate coin, whatever's coming on the Dark exchange? So you could have series of hops from any asset to any asset.
Yeah, exactly. At the beginning, it would be like two signature thing. So you're getting first two, for instance, for Dash to Doge, you'd go like Dash Rune on Maya and then just sign one more transaction, Rune to Doge. But that can actually be also aggregated on code such that eventually you also just do Dash. And when you say the asset I want is Doge, Maya automatically will do that for you. So what the code will do is say, okay, just put that you want that you want Doge and your Doge address. And what we will do is just send it over to Rune. And when we send it to Rune, we will send it to ThorChain's reserve with the instructions to give you your Doge. So that would all happen just with one signature, which is obviously the best UX. We will get there. Just give us a few months to first just warm up essentially. Then we can get more crazy with that. And then you can also even go to aggregators. So you will be able to go from Dash to any asset in Avalanche with just one click, which would be breathtaking to watch.
Very good,
yeah, we'll see.
Well, I have to add on that note that just bringing it a little more high level, one of the reasons why I'm so interested in Dash being on a DEX is, a lot of the examples that we gave was, Dash to this, Dash to this, to this, to this. One of the reasons that I think it's so important that we have this is that other projects can go back into Dash or into Dash for the first time. So if you're one of those crazy kids that just, bought into the hype of Dogecoin or whatever, just because you thought number go up and this is great, this is fun. I have some friends that have done this, by the way.
Me too.
At some point, they're going to realize they want to actually use this in the real world, and they want to actually use it as a currency, like this whole industry was intended to be done. And they're going to want to take their Dogecoin and their joke and their meme coins, or even their Bitcoins, if the Bitcoin fees go up again and whatnot, they can go into Dash and then from Dash into goods and services. And that's what our whole goal is with Dash, is to actually get into a new economy where we have an asset that's more reliable than all of our nation state fiat currencies. That's to bring it back into that intro reel. There's just so many problems with national currencies. I mean, you saw the first clip was about, banks are getting 4.5% interest on our money that we park with the banks, and then they're passing on like fractions of a percent to us. that needs to stop. And Maya will help us stop that, because now you can have Dash savers, where if you have some Dash that you want to save because you're investing into this economy, then you can get some yield on that, which is what a primitive that every monetary system should have, is the ability for savers to get some yield on their savings. So the high level for Maya is, you've got some Dash, you want some yield on that, you want some interest, whatever you want to call it. You throw it into this, and you throw it into the Maya as a liquidity provider, and basically you've got some yield. So it's an alternative to masternodes. It will compete with that, and because of both options being there, the yield will be higher for both, because there's just more uses for Dash, more use.
It's like we may have lost Ryan there.
We have lost
Ryan.
I'm sure he'll come back. And to expound, or to rather clarify what you had said about the yield, Ryan, would it be true that for Dash holders who want a trustless solution and who don't currently have the 100 Dash to participate in, say, CrowdNode's trustless hosting, that yield earning through Maya would be the trustless option for them to take, having that sub 100 Dash amount?
I'll go ahead and say something about that, and then maybe Aaluxx can say something about that, because there's this funny little word that we use called trustless, and I think it's a little bit of a
misnomer.
It's a little bit of a misnomer, because there's trust everywhere that you have to have. So trustless, I wouldn't use that word for anything in cryptocurrency. But trust minimized for
I
sure.
like that word too.
You're not, when you're sending your Dash into the Maya protocol, you're trusting a protocol, and you're trusting many operators that have the financial and economic incentives for it to run smoothly and well, as opposed to trusting a single third-party custodian with your Dash, which in the case of CrowdNode might be fine, because they have a good track record and we trust them. They're part of our community, but still they're more like a trusted third party. But even worse, if you sent your money into BitGo or whatever, that's definitely a trusted third party and very far away from the trustless side of the spectrum. So yeah, to answer your question, yes, you would be able to use Maya to get more trustless. In other words, ironically, more trusted. You can really trust that more than a third party custodian.
Yeah. And the beautiful thing also on Maya is that you have proof of reserves and proof of liquidity anytime. Like the addresses for the vaults in each chain are public. You can today just go and see how much Bitcoin ThorChain has, and does it match up with what they're claiming they have. And it's also proof of liquidity, because every 7 days that liquidity is sent to another vault. So they're even showing that they have the ability to move it around, which is also another thing that sometimes is not the case. I can point to, hey, this is my wallet. Look, I have many Bitcoin, but I don't really have the ability to move it without somebody else's permission or signature. So the fact that we are showing, like, there's this Dash that you have in an LP position or in savers, and look, it's right there. That's the address on Dash chain with your money on it. And look, we're moving it around now. See, it's there. You can use it. So even if this trust minimized system does rely on nodes, these nodes are heavily bonded and they lose more than they gain if they misbehave. The code, it's also trusting the code in some shape or form, but it's been battle tested, it's been audited, and we'll see. Like, also, don't rush on going on Maya, like with your life savings. Watch it work. See how
tell me
it's
what to do, Aaluxx.
Yeah.
Put in everything on there.
Yeah, but over time we have to earn your confidence too. Like, we have to execute, we have to do well. Code and DeFi is tricky, so also take your time. Support us. That'd be great if you can invest something. But like, hold on your life savings. Just please be cautious. But over time, as let's say 2 years from now, Maya is by far one of the best options to swap. the good thing about swapping also is that swapping happens instantly. Like you have full custody of your assets, then you perform the swap and receive the funds again in a wallet of your custody. So that's different to us, like using Binance, where you send the money to Binance, and only once in Binance can you do the exchange. The money, you receive it on Binance and you have to actively withdraw it. And during that whole time, it was like under that third party's custody. Here you have it on your wallet, you perform the swap, a few seconds or minutes later, you have your asset again in your custody, which is for swappers, I think, much, much safer. The time dimension being so short makes risks.
It's like
reduce.
An interim level of trust.
Yeah. So
quick question, brass tacks, dates and stuff. Based on your forecasts, when will people be able to add Dash liquidity to Maya? And following that, when will be your expectation of when people could trade with Dash as a pair?
So our target now is before 10th of April.
Yeah.
So that's what we've published in our roadmap. For you guys to know more or less what's going on, we're launching in March with a liquidity auction where anybody can add BTC, ETH, or Rune to the pools, and we will give cacao away for free, like all of cacao. Well, 90% because 10% goes to a reserve owned by the protocol. So that
could you just go through those launch assets again? What are the launch assets that you could add yield to take part in that auction?
BTC, Rune itself on ThorChain, ETH, and also USDT and USDC, ERC20, which are important for arbitrage. And
are those only symmetric or asymmetric? So the dual asset, two assets, or the single asset models?
So this is dual, but you're adding BTC and we're donating the cacao to your position. So you are paying for half of the position, you're getting the other half for free. And now you're a dual LP, and no cacao will be minted again. So it's like a great opportunity for people to start. And all cacao starts circulating in pools, doing what's intended to do, and fairly distributed to people that supported our launch, which is great. So that happens to March, and it happens for a few weeks so people don't rush, and they can do their own research, due diligence, calmly take a rational and sound decision. We hate hype here. We hate rush. Just take an informed decision. And then after March ends, we donate all the cacao into the pools, and we enable trading. And as soon as we kind of just perform a few swaps, everything's ready, everything's fine. We do two things. One is prepare Dash for mainnet, and second is prepare the first few bonded nodes to come in. And we will perform a churn. And as soon as that churn happens, if everything works out well, it brings in the first few bonded nodes, and it brings in Dash. Then once Dash is on Maya, it's just a question of doing some sanity checks, adding seed liquidity to the pool, and then opening it up for anybody to add liquidity and trade.
What would be your target for seed liquidity in a fiat value is fine, US dollars? What would be your sort of target?
So the seed liquidity is essentially just the very first liquidity, so that there is something there, and then anybody else can just add liquidity after. I would say anything around $100,000 to $200,000 is great, and then it's not a lot, honestly. Obviously, the deeper it is, and look, there's a dog here. Sorry for that. Anybody can add, and it will always be a function of volume. So the deeper the pool is, the more volume it has, because swaps are more affordable, and affordability increases demand. So we want that pool to be very deep, but also trade volume generates fees, which gives APY. And the more people we have, that APY is also diluted across a larger capital base. So the market eventually just finds its equilibrium, and I don't know where that's going to be. It can be like $1 million depth. It can be $2 million.
We do have a question on that note. Whilst we're pulling numbers out of the sky, there is a question: what has been the average return from bonding with exchanges like Maya? I guess we could look at a comparable for LTC on ThorChain, for example.
Yeah.
What could a Masternode owner or anyone in the Dash community who's interested in providing liquidity, what could they hope for on a return? What yield could they hope for? It's numbers from the sky, I know.
Yeah, it's variable at the end of the day, and it depends. What are we talking about? The dual LP or the single side LP? like the savers.
What's most common? Savers
yeah.
is probably the safer option. I dare say a lot of people will choose that. So
yeah, I've seen numbers between 4 and 8%, depends on the asset on ThorChain. And then for dual LP, depends as well. The higher the swapping, the better, obviously. But I've seen anywhere between 10 and 20%. Now it's completely variable, so this is not coming out of like us subsidizing or anything. Initially, Maya's would probably also be a bit lower, while we get, like Ash said, integrated to Edge, integrated to UIs, to wallets, to Trust Wallet. Maybe you guys don't know, but Trust Wallet is already using ThorChain, so we want them to use Maya too, right? So as we get more integrations, we will increase the volume, and that should increase also the APY you receive. So just be on the lookout for that. Depends on the asset, depends on the volume. If many people are doing what Rion is saying, like many people are going to Dash to use it, and then once they get paid in Dash, they convert it sometimes to BTC, and people are just using it, and it's useful. Well, you're going to get paid better for adding your liquidity. You're doing a more valuable thing by putting your liquidity, and the market is recognizing that. So yeah, it will depend. Thankfully, it's all on chain, so you can just go see and query those APYs, see if it's a good use case for yourself, and go ahead and try it out.
Right on. Well, I think that we have just all had a full education in various things today. At least I know I have. I thank all of you, gentlemen, for your time and contributions today. Aaluxx and Ash for joining us, and then, of course, my co-host, Rion. So that is it for us at Incubator Weekly today, folks, and we're looking forward to seeing you next week again. Same time, same place.
Thank you, guys.
Thank you.
See you so much.
Thank you.